when we talk about inflation adjusted, the only things that haven't adjusted for inflation are gold and silver. And that's by design. They were kept down because they are the barometer of the health of the system. And that's Gibson's paradox. That's holding down the assets that are truly measuring the value of the currency underneath it. So yes, I do think it can go higher than anyone thinks possible. Is $200 crazy? I'm not saying silver's going to $200, and I can see the title of this conversation already. Andy Schectman says silver's going to 200 or maybe 600. But you know what? It wouldn't be out of line to see it at 200. Not even a little bit, Michelle. And I mean that as God is my witness. So yeah, gold and silver are some of the only assets that haven't found real price discovery. The S&P 500, the Dow Jones, the real estate market, crypto. Okay, these things have found some real semblance of value, fair value, right? How about gold and silver? Just beginning. So sky's the limit. And I do believe that. I don't think we'll have a bimetallic monetary system. And even Judy said that to me as well. I don't think we will. I don't think you'll see people trading silver to buy candy bars at the store. But I do believe that it has a role as a monetary asset in a dollar system that is devaluing. Gold will have a monetary aspect to it, whether it be with the BRICS nations in their settlement system or backing the treasury. As Judy says, but look at these states that are saying gold and silver are legal tender. Now, if I had to guess, how could gold and silver reintegrate into a monetary bimetallic system? I think the state of Texas has a good plan where you take your gold and you take your silver, if it's American made, and you bring it to the Texas Bullion Depository. This is where they're going, I believe. And they will check it in. Okay, Michelle dropped off 400 gold eagles and 10,000 silver eagles. And bang, they give you a credit card that says, this is now yours, free to spend at any establishment, and it will just be deducted out of your inventory. This is how you take gold and silver in the 21st century and use it as legal tender rather than going door to door. So could it become part monetary? Abso-freaking-lutely. But I think it will be in a manner like that, like Glint, right? Where you can take your Glint card and spend it. But I think there will be states like Texas, maybe like Florida, like Oklahoma, like Arkansas, that will say, put your money into a state-sponsored vault, get an accounting, a real-time accounting and auditing, and use it as your form of money. And I could see that, absolutely.
Stop what you're doing right now. If you own gold or silver, this message could completely change how you see the markets. I'm your host with Metal Watch, and today we're breaking down Andy Schectman's urgent warning, a message every gold and silver holder needs to hear. As of today, gold has surged past $4,200 an ounce, and silver is testing the mid-$50 range after one of its wildest weeks in years. Central banks are buying record amounts, China's imports just hit new highs, and U.S. banks are quietly expanding their short positions again, all while investors around the world are shifting out of fiat and into physical metal. Andy says this isn't random. It's the clearest sign yet that the dollar system is breaking from within, and that real price discovery for gold and silver has not even begun. Stay tuned. In the next few minutes, we'll unpack what Andy Schectman is warning about, why silver could shock the world with a $200 target, and what it all means for your savings, your investments, and your financial survival in 2025.
The cup and handle formation would tell you that $96 would be the next target. You take the top of the cup, 45-year cup and handle, double cup and handle formation. The bottom of the cup was $4. The difference between the two is 46. Add it to the top, which has been broken through. The next target is 96. But where is there resistance in a market that has none above this price level? Where is real price discovery? And you're right. I mean, if you took gold right now, let's see if I can look right here and see what the price of gold is at the moment. If we took gold right now at 41.40 and we divided it by 42, which would be roughly the average price of the last 100 years, and this is not even talking about your inflation adjusted price. But if you took that and divided it by 42, right now, silver should be at $100 an ounce right now, just based upon its 200-year average. But it's coming out of the ground 6 times higher than that. So Is it possible $600 could really be a number? I don't know. That would meet the geologic ratio. So I think silver will go higher than people think possible because you now have an environment where I think it will be very difficult for the West to continue, especially with the Basel III regulations about physical metal versus unencumbered or encumbered futures contracts, to hold it down at these levels when there's so much physical demand. So is $200 realistic? Absolutely it is. And quite frankly, if you take 4140 and you divide it by 7, which is what Keith Neumeyer will tell you it's coming out of the ground at, the geologic ratio right now between gold and silver is $591. Now, is that insane? Maybe. Is it crazy? Sure. Could it happen? Why not? At some point, don't these two numbers need to align themselves in an asset that is now being reclassified a critical mineral, in an asset where some of the most powerful nations on the planet are buying it using these subsidized prices? And the thing of it is that in an environment where everything has exploded in value, everything, and we've talked about how when my dad graduated college in '63 and married my mom, that's $6,000 a year. He and my mother could live comfortably together for a year on $6,000. Really? Or a brand new Corvette in 1973 was under $8,000 and now it's 120. Really? I can give you a million examples where the price of inflation is exceeding. Look at the price of a home in 2005, 20 years ago, was $240 or $240,000 an ounce, or $240,000 rather. And now, and gold back then at $400, what was the number? 240,000 divided by 455. That's 527 ounces of gold. The average price of a house today is about $450,000, but that 527 ounces of gold right now is worth what? Over $2 million. So
Andy Schectman's message is crystal clear. Gold and silver aren't just assets. They're the measuring sticks of monetary truth. While stocks, real estate, and crypto have already reached fair value zones, gold and silver remain the last suppressed markets. According to Andy, that's not a coincidence. It's policy. Governments and banks have kept them down because they reveal the real health of the currency beneath them, what economists call Gibson's paradox. He reminds investors that we're living through a global turning point. Western debt is spiraling, the BRICS alliance is building new settlement systems around gold, and nations like China, Russia, and India are buying physical metal hand over fist. Meanwhile, Basel III regulations are forcing bullion banks to hold real, unencumbered metal instead of paper contracts, and that's tightening the entire system. From a technical standpoint, Andy highlights a 45-year cup and handle pattern in silver with a breakout target near $96 per ounce, but he says that's just the start. Based on historical ratios, if gold trades above $4,100, silver should already be around $100 per ounce. In extreme realignment scenarios, $200, even $600, is mathematically possible. And it's not just theory. Look around. Texas, Florida, and Oklahoma are moving to make gold and silver legal tender, issuing digital cards linked to real stored bullion. Industrial demand for silver is exploding, from solar panels to electric vehicles, creating record shortages. The COMEX and LBMA are facing physical drain, with delivery demand hitting multi-decade highs. Andy says, don't look at gold and silver going up. Look at the dollar going down. When you see metal prices rise, it's not metals gaining value. It's your currency losing purchasing power. The real question isn't how high metals can go, but how low the dollar will fall before the world reprices it. In Andy's view, we're not heading toward a nostalgic return to a gold standard. We're entering a digital era sound money system where physical gold and silver quietly regain their role as anchors of trust, a monetary reset by necessity, not choice.
When we talk about inflation adjusted, the only things that haven't adjusted for inflation are gold and silver, and that's by design. They were kept down because they are the barometer of the health of the system, and that's Gibson's paradox. That's holding down the assets that are truly measuring the value of the currency underneath it. So yes, I do think it can go higher than anyone thinks possible. Is $200 crazy? I'm not saying silver's going to $200, and I can see the title of this this conversation already. Andy Schectman says silver's going to 200 or maybe 600. But you know what? It wouldn't be out of line to see it at 200. Not even a little bit, Michelle. And I mean that as God is my witness. So, yeah, gold and silver are some of the only assets that haven't found real price discovery. The S&P 500, the Dow Jones, the real estate market, crypto. Okay, these things have found some real semblance of value, fair value, right? How about gold and silver? Just beginning. So sky's the limit, and I do believe that. I think it would be silly to expect there never to be a pullback, but not the pullback that people are thinking. I don't think that's even possible. And if it's such a small, irrelevant market, why do 8 banks hold the largest concentrated short position in the history of any commodity traded on COMEX, these Western banks? And by the way, if you want to pull up, the article is from Monday, October 13th, yesterday, on CNBC, and it's titled $100 Silver. Analysts say the metal could double from record highs on CN-BC. So, we're beginning to see mainstream saying these kinds of things. But yes, I think anyone who expects things to move up straight line without pulling back.
But could we see a dramatic pullback? Could we see a dramatic?
No, I don't think so. And if it is, it won't be long lived. Look, to see a market that falls by $3-4, to me, that was always dramatic. Although prices are going higher, but it shoots right back up. Could you see it? Yeah, why not? And in 2020, silver went from 20 to 12. But when that happened, you had 100% premiums and 12-week delivery delays on everything physical. So the physical demand right now would eat that up for lunch. And I think anyone that would be silly enough to try and short the market in that manner, naked shorting, would face a very quick existential threat and an exit from financial services when they get called on the carpet for delivery. So it just seems to me that maybe those tricks are from days gone by when no one really cared too much about gold and silver. I think we're moving into a different reality right now.
And precious metals are at its core.
Think about that for a minute when we talk about the articles that come out of the BS mainstream. You're far more of a journalist than any of these clowns are on any of these major stations, because if that were really so important that the largest commercial bullion bank in the world pays the largest fine the Justice Department ever handed out, $920 million, many thought they should have been charged with RICO and racketeering, but they skated with spoofing charges, yet they're still allowed to be the major custodian along with BlackRock of the world's largest silver trust and the custodian along with BlackRock of GLD. So, in other words, this market is far more important. That's what this whole discussion is about today, Michelle. The mainstream wants us to focus on the airplanes going back with silver and all of this nonsense. And is it overvalued? And is it going to come down? And no, the U.S. government's reclassified it critical. And 8 Western banks held the largest short position of any commodity traded. And J.P. Morgan, who paid the largest fine the Justice Department had ever handed out for manipulating the silver market, call it what you want, spoofing it was much more than that. They got off easy, is also the custodian of said largest silver trust in the world. The game is much bigger than we are being led to believe, and that is really everything I'm trying to convey here. Do not focus on what they want you to focus on. Take a step back and look at the big picture. Look what the rest of the world is doing, and they're saying, you guys are idiots. We're going to play this against you. We're going to stand for delivery. We're going to buy Doré. We're going to buy concentrate. We're going to buy it from every single corner of the globe until you catch on. And someone in this administration says, it's time to wake up, y'all, and start bringing it home. This is a ruse. And I don't know. If I had to guess, I think you'll see silver much, much higher a year from now. Much, much higher. And yet it doesn't mean it's going to go straight up. And I'm not telling people to buy it for that reason. I'm telling you that if the silver market and the gold market go much, much, much higher, that's great. But what it really means is the dollar that you call money, that melting ice cube, is getting much less and less and less in value. It's the opposite way of looking at it. Don't look at gold and silver going higher. Look at the currency that we call money that is used to purchase said gold and silver, which is real money, is buying you less and less and less of it. And that is exactly what they want. The dollar debasement trade. That is the only way if you give up on the reserve status and you peg the back end of the bond market to gold to have zero upfront borrowing costs, that once you bring back your manufacturing, you have to sell it in a devalued dollar manner. And that's exactly what this is all about. So they're throwing you off the scent again so that people don't crowd them out of ultimately what their trade is. Yeah, you don't want it. We're sending it back to London. BS, we are. We're going to continue to buy more. You watch, the COMEX numbers will show more and more coming in. Some will leave. The arbitrage is real. But the big picture is that's the dumbest thing you could do.
So what should investors do now? Andy's answer: own what's real. Don't chase every dip or headline. Understand what the market manipulation was hiding and position yourself before the next repricing wave. Q&A. Q1. Can silver really hit $200 or $600? A. Andy says yes, because silver's price has never reflected its true scarcity or its monetary role. Once paper suppression fails, real physical demand sets the price, not algorithms. Q2. Is it too late to buy? A. No. He believes we're still in the early innings. Pullbacks will happen, but the long-term direction is set. The real risk isn't volatility. It's missing the revaluation entirely. Q3. Why does this matter if I don't invest? A. Because when currencies lose trust, everything priced in them changes, from homes to groceries. Gold and silver aren't speculation, they're defense. Final message: if you've made it this far, you already understand what 99% of investors don't. That gold and silver are the truth hiding in plain sight. Don't wait for mainstream media to confirm it. By the time they do, the repricing will be over. Hit subscribe right now, tap the bell icon, and comment below. Gold or silver? Which side are you on and why? We read every comment and reply to the best ones in our next episode. This is Metal Watch, where real money still matters. Stay sharp, stay prepared, and remember, when the dollar melts, metal endures.